Hey guys, it's Nick. You know, with commodity markets going crazy, some people may have seen the headline that nickel has surpassed $100,000 per metric ton, which is more than 5 times the average price it was last year. Part of this price jump is because of the Russian invasion and the talk of supply disruption as shipping companies avoid Russian ports and companies try to reduce their exposure to Russian products. Along with that is a short squeeze of the producers of nickel who normally short nickel to hedge the price of the nickel that they produce. Just to give you a general idea of how important nickel is and how much of it comes from Russia, 70% of nickel is used in stainless steel and 7% goes into EV batteries. Now, Russia makes up 6% of global demand, but makes up 17% of the highly pure Class 1 nickel that EV batteries use. So, should you go to the bank and buy as many nickels as you can right now? Well, luckily, somebody already did that back in 2011. Let's take a look at this story. Back in 2011, Kyle Bass, who runs Heyman Capital Hedge Fund, bought $1 million worth of US nickels for their nickel content. I'm going to look at and calculate what they are worth today and why you should not try to hoard nickels like Kyle Bass. There is a saying that bad money drives out good money. And what this means is that people save good money and use bad money. This is the case in the US when in 1965, the US stopped using 90% silver in their dimes, quarters, and half dollars. This caused people to save them and not spend them, so they quickly went out of circulation because the value of the silver inside the coins was worth more than the face value of the coins. Even the copper penny in the US stopped using copper in 1982, so pre-1982 pennies are hard to find because their copper value is now about 3 cents per penny now. Now, a nickel weighs 5 grams, and 75% of that is copper, and the rest is nickel. At the time that Bass bought his nickels, the actual metal content of each coin was worth about 6.8 cents. So Bass was essentially buying 6.8 cents for 5 cents, or 1.36 million worth of base metal for just $1 million. But to realize this 6.8 cents per nickel, Bass would have to sell the copper and nickel as metal and not as a coin. And this is not easy to do. Since 2006, it's been illegal to melt pennies and nickels down only because the value of their metal is worth more than the face value. You can still melt down silver coins that are no longer in circulation pre-1965. That's not an issue. So let's go see what these nickels would be worth today if we use the price of $100,000 per metric ton for nickel. So if you are interested in buying gold or silver or any precious metals, you should definitely know about this website called coinflation.com. And they tell you the value of silver or gold in any coin based on today's value in the market. So let's say 1964 Kennedy half dollar is worth $9.38 right now at today's silver price. And they also have calculators where you can put in how many coins you have and it will tell you the melt value of them. And they also do it for base metal coins. So here, a 1982 or older copper penny, which is 95% copper, is worth 3 cents at today's melt value, with the copper price about $4.5 per pound. And for nickels, let's take a look. So at the face value of nickels, meaning how many nickels do you have? One nickel is 5 cent face value. So here they're using copper price of $4.5 per pound and the nickel price of $17.3 a pound. But this is not accurate because the nickel market has been closed all week because of this short squeeze. So I'm going to figure out what the actual nickel price per pound is and put it into these values and come up with a number. According to this old number, of nickel. They're saying the nickel is worth 9 cents. So here's a chart of nickel. As you see, during the last 5, 6, whatever years, it's been generally under $20,000 a ton. And here in just Monday or Tuesday, it went up to 0.1 million, which is $100,000 a ton. And so this is in metric tons, which a metric ton is about 2,204 pounds. So let's divide 100,000 by 2204 to come up with the dollars per pound. So dividing 100,000 by 2204 is about $45.37. So there is 0.0028 pounds worth of the metal nickel in a 5-cent nickel. So multiply the 0.0028 times the $45.37 per pound of nickel, not this old price of 17, and you get 12.7 cents just for the nickel. Now you have to add the copper value as well, and so there's 0.0083 pounds of copper in a nickel. Multiply that by 4.5886 per pound, and that comes out to 3.8 cents. So add 3.8 cents to 12.7 cents, and that is 16.5 cents, or a little more than 3 times what the nickel is worth. So if Kyle Bass was able to sell that today for the actual value of the nickel without breaking the law, he would have about a 230% gain since 2011 when he bought them. Now, in any investment, there's opportunity costs. So let's see what he could have done by just putting that $1 million into the S&P 500 around 2011. So in 2011, SPY, the ETF, was about, I don't know, anywhere from like 133 down to like 115. So let's call it about 120. And right now it's about, call it about 425. So let's figure that out. And so if you do the math, that's about a 254% gain, not including dividends, which is about 2% a year. So add another 20% or so, and that's above 275% or something along those lines. So was that really a good investment based on today's price? Not really, and for a number of factors. One, he has to store it for all of these years, and I'm sure he's not storing it in his house. He stores it in some warehouse that has insurance and guards and whatnot, so that's a cost every year. Also, like I said, it's currently illegal for him to melt them down and sell it for the base metals, so he has to hold on to them until either the law changes or something else happens. And that $100,000 nickel price is already coming down because of, among other things, the metals exchange is doing all kinds of things to help this big producer who has an $8 billion margin call. They're breaking a whole bunch of trades that brought it up to $100,000, which is pretty illegal. But anyway, they get to change the rules when the big players lose money. And so that's how it always is. And it was even done in the US during the flash crash and other times as well. So although you shouldn't run out and buy up all the nickels you can, with today's February CPI coming in at 7.9%, which is the highest since January 1982, you should have some precious metals as a hedge against runaway inflation. No one knows for sure what's going to happen with Russia or where inflation will head to, so to have some diversity in your assets makes a lot of sense to me. I hope you like this one, and I'll see you in the next one. Thanks for watching, guys.